We're not too focused on gold or even commodities or metals at this point. We're still very much focused on equity markets and the rotation. And just in general, our investors are now looking at, focusing on the earnings growth and also the recovery and the reopening of the economy. So we're still looking at this rotation from growth to value.
Cisco's numbers are out. Let's get to Josh Lipton with those. Josh.
Well, Cisco reporting Q3 results here, 83 cents on the bottom line. That's versus expectations of 82 cents. Revenue up 7% to $12.8 billion. That's versus expectations of $12.6 billion. Looking into Q4, they're calling for between 81 and 83 cents. That's versus expectations of 85 cents. And revenue, they say, growing between 6 and 8%. That's versus an expectation of 5.5%. I remember heading into this print, the stock had rallied about 15% over the past 3 months, but giving back some of that, at least initially, here in the after hours. Back to you all.
Hey, Josh, 10% growth in product orders looks like the highest growth rate in almost a decade. Is that the macro environment that's helping Cisco, or is it something specifically that they're doing to cater to this new hybrid work environment?
Yeah, no, so there is a quote here from CEO Chuck Robbins, speak to some of the trends and themes they're saying. He calls this a great quarter with strong demand across the business, says he's confident in their strategy, their ability, he says, to lead the next phase of the recovery as our customers accelerate their adoption of hybrid work, digital transformation, cloud, and continuing strong uptake in our subscription-based offerings. To your point, Sarah, when you talk to bulls on this stock, they're going to point out the reasons they tell clients to commit capital to this business, because they like the management team, because they say they're offering critical tech, because they like the transition of this business model to a software-based recurring revenue model, and they see attractive valuation. I think on the call, though, you're obviously going to have some questions about that guidance, which starts at 4:30 Eastern.
Also, don't miss Jim Cramer's interview with Cisco CEO tonight on Mad Money, coming up at 6 p.m. as always. Josh, quick word on Cisco and that type of old tech.
My favorite old tech name right now is not Cisco. I think Oracle is a lot more exciting, and they're way further along on the recurring revenue business model transformation than Cisco is. So if I have to own a low-growth 90s era tech giant that hasn't done a lot lately, Oracle over Cisco.
Yeah, and I just wonder if they're going to get questions on the guidance of whether the supply component shortages played a role, which it has in a lot of these tech companies. She wanted to give you the final word. We didn't get to talk a lot about Target, but obviously an important barometer for retail and consumer spending. That stock did well today, but the XRT, the retail ETF, dropped almost 3%. We saw something similar yesterday. Stellar results from Macy's and Walmart and Home Depot, and the retail ETF was lower. What does that tell you? Has a lot of that good news been priced in already?
I think it's certainly going to take probably retail higher, and it's just in the beginning. So there's more opportunities there, and I think a lot of the investors who was previously focused on technology are now seeing the underperformance this year and going into these other sectors.
Shepard Smith here. Thanks for watching CNBC on YouTube.